Друзья, коллеги, доброе утро. Мы рады всех приветствовать на нашем очередном заседании. Утро сегодня
Good
немножко
morning,
хмурое.
everyone, and welcome to our session. The weather is a bit cloudy in Moscow, but let's not be gloomy because we are going to have a very interesting session today, I'm sure, on one of my favorite topics about the perspective of global investors on companies, on their activities in the context of ESG and climate management. This is not a new topic by any means, and I don't think we can call it a hype or a fleeting trend, because today we have a full-blown industry of data specialists, MSCI, Bloomberg, Morningstar, and many, many others that analyze, that assess how well companies are complying with the carbon emission reduction goals and other ESG metrics and targets. And the idea of the so-called green movement, the ESG components, the ESG overlay, is that capital markets, being in and of themselves the blood vessels of this big economic organism, can change the behavior of business and are changing the behaviors of business thanks to or without any help from the government. And if we think about it today, according to Global Sustainable Investment Alliance, there are about $40 trillion of ESG assets worldwide. And according to Bloomberg, by 2025, one third of such assets will amount to 53 trillion. The entire amount of ESG assets, of the entire amount of assets under management will be with ESG assets. So this is going to be a very big trend, a very big trajectory. And so companies, controllers, participants of this process need to treat it as one of their priorities. I'm very happy to see this representative, distinguished group of experts at this meeting, because we'll be able to look at the ESG agenda and the investor's perspective from different angles. And we are looking forward to this exchange of experience and expertise. We'll talk about the future and the assessment of the investor community, of where we are and where we are going. A couple of household issues before we move on to the discussion. Please note that this conference is being recorded, and the recording will be made available to you. The session is available in Russian and English. So we are going to have speakers presenting in both languages. So if you would like to switch to another one and listen to the interpretation, you can do it on your controls panel. Before I introduce the speakers, I can't help but thank our traditional partners. The CGI Russia platform has been operating for a year. This September, we are celebrating our one-year anniversary, and we have done a lot, and we have pretty ambitious plans to gain momentum and to develop our activities. Our general partner is still Sber, our intellectual partner is Deloitte, and our main strategic partner is Polius. Our legal partner is Dalley Piper. BBN Hill Norton Strategy, another partner of ours. Xerica is our analytical partner. The hosting party is the Skolkovo Center of Independent Directors, and our institutional partner is the London Stock Exchange. Also, we have recently signed an agreement with our academic partner, the Financial University, and we are planning to sign some more partner agreements, and we will be happy to announce these developments at our next meetings. Also, Marsh, Our investment partner has recently joined us, and we are planning very shortly to launch a panel on insurance. This is going to be a separate event on insurance, and we will probably prepare some research around it. Please stay tuned. Moving on to today's agenda. First, I'd like to introduce our speakers. Once again, very happy to see this strong pool of experts. I am anticipating a very interesting discussion. Sergey Strigo, co-head of emerging markets, Amundi Asset Management. Sonia Dilova, emerging markets director, BMO Global Asset Management. William Scholes, investment director with Aberdeen Standard Investments. David Nichols, deputy chairman, the Russian Association for Corporate Governance, API, portfolio manager with East Capital. Also on board is Oleg Tsvetkov, managing director and head of the corporate secretary service of Sberbank, and Ekaterina Gorbatyuk, of the London Stock Exchange, responsible for primary capital markets in Russia, CIS, and Central Asia. This is where we begin. I give the floor to my colleague Olga Pasko, and we start our discussion.
Оля, тебе слово.
Лена, спасибо большое.
Thank you, Lena. Thank you for opening this September session. Thank you for introducing our stellar participants. I am particularly happy to be part of today's discussion because many speakers today are good friends and colleagues of mine. We've been working with many of them for more than 15 years in the asset management industry. So today we're going to address the investor assessment and perspective on the ESG strategy of companies. Many Russian companies consider themselves to be leaders on the ESG agenda, but their shares are traded with a significant discount as compared to their international competitors. What can the board of directors do? What can the management do to convince the investor community that they are very serious, they're very earnest about their approaches to decarbonization and ESG? It's true that some of the biggest investment funds have taken a very strong stance on ESG agenda, and in addition to that, they combine their efforts to achieve carbon neutrality by 2050. One of the first platforms that brought investors together was Climate Action 100. That happened in 2017. By now, the platform unites 615 participants, managing 53 trillion in assets. The goal of that platform is to facilitate the reduction of carbon emissions in the participating companies, most of which are industrial giants, big companies responsible for 2/3 of global emissions. In December 2020, less than a year ago, another initiative emerged, the Net Zero Asset Managers Initiative. And by now, it has 128 investment companies with 43 trillion in assets under management. Today, we have representatives from Aberdeen, BMO Global Asset Management, and Amundi, the companies that were among the first ones to join this initiative. But not just collectively, but also individually, investors have been developing their investment strategies which reflect their approaches to decarbonization. For example, in Finland, Nordea announced that they would prohibit its 200 funds that manage $143 billion in assets. So they will ban them from investing in the energy sector because first, the issuing companies need to prove that they are on the so-called green transformation trajectory to prevent being excluded from the Nordea portfolio. But it's not just investors who are very serious about the ESG agenda, but the London Stock Exchange also announced that it was the first global exchange group that assumed this commitment of carbon neutrality and that joined the UN Race to Zero. The exchange is committed to reducing to reduce its carbon emissions by almost 50% by 2050. The London Stock Exchange is at an intersection of a lot of economic processes and markets, and it acts as a very important intermediary across three major sectors of climate management. First is provision of data and disclosure of information. Second, the stimulation of the new green economy growth. And third is help in energy transformation for companies in all sectors. And this is where I'd like to give the floor to Katya Gorbatyuk, who is leading the primary capital markets division for Russia, CIS, and Central Asia at the London Stock Exchange. 13 Russian companies are currently entering the global market, preparing for the IPO. Ekaterina, what are your recommendations for the management, for the boards, to improve the investor assessment of those companies in terms of ESG? Katya, over to you.
Very comprehensive introduction indeed. And as you rightly pointed out, businesses around the world are facing immense pressure from all stakeholder groups to align themselves with a greener future. So being one of the largest exchanges in the world, we view it as our responsibility to support the evolving needs of issuers and investors. So it's my pleasure to support your work, which we view as a pivotal work in Russia. I will share with you how the London Stock Exchange uses its convening power to mobilize the necessary support and bring together a community of companies, investors, advisors, market intermediaries, and indeed regulators to jointly enable a more sustainable economy. Next slide, please. I'd like to illustrate some clear trends that you have already mentioned on the demand side. They're very much driven by the fact that investors themselves are under extraordinary pressure from regulators and their own capital providers to show that they're using their capital as a force for good. And it's channeled to those companies that contribute to positive environmental and social outcomes. In fact, in the past 10 years, funds pursuing an ESG strategy saw a significant growth in assets under management. And 85% of UK financial advisors saw an increase in client requests to allocate capital to ESG funds. So looking at this chart, for an issuer of public equity, it becomes clear that aligning profits with the needs of the planet is no longer a matter of choice. In fact, setting environmental targets, delivering on them, and reporting on the progress are all part of the company's mandate, along with delivering shareholder returns. Next slide, please. Just very quickly, same trend is evident in debt markets. And in the first half of this year, sustainable debt issuance is 80% greater than last year. Next slide, please. London Stock Exchange is a leader in supporting the green and sustainable financing movement, and we continue to develop new products in close collaboration with the market. We're the first global exchange to commit to net zero, as Olga mentioned, and we are co-chairing the UN Sustainable Stock Exchange Advisory Group to develop a climate reporting guidance. Following the merger with Refinitiv, we offer the most integrated range globally of tools for investors and companies on the ESG side. On the Refinitiv side, our ESG data is one of the most comprehensive databases covering 11,000 companies currently, with private companies to be added. And on the capital raising side, next slide, please. We offer a green focus across asset classes in equities, bonds, and investment funds. In fact, we launched the first global index that enables investors to align portfolios with climate transition and the goals of the Paris Agreement. And our index provider, FTSE Russell, has been awarded the best index provider for ESG Asia for the second year in a row. So this is just a reflection of our continuous effort in all directions across data and indices, growing our green offering across asset classes, and the engagement with regulators to support robust ESG disclosure. Next slide, please. We believe it's crucial to bring to the forefront those companies that are contributing most to the environmental goals. And that's why in 2019, we launched the first of a kind green economy mark. This recognition allows a number of benefits to our companies. First, it's visibility to investors. Then it's performance, because collectively this group has outperformed the FTSE All-Share Index by 110% over the past 5 years. And then, of course, it's share price resilience and lower volatility, as evidenced during the period of COVID-related uncertainty. And in the 12 months that followed, this peer group has bounced back much stronger, outperforming its benchmark indices. Next slide, please. Very quickly, this chart shows just the enhanced capital raising possibilities to the green economy mark companies. As a peer group, they raised more capital than many industries, more than real estate, more than insurance, more than retail, and so on. Next slide, please. On our sustainable bond market, over 16 billion was raised by 51 bonds in the first half of 2021. More than during the entire 2019 or 2020. Just compare that to around 1 billion in 2015 and 6 billion in 2018. To admit a bond on our sustainable bond market, issuers have 3 avenues: based on their existing revenues, based on transition targets aligned with the Paris Agreement, and based on certified use of their proceeds. Next slide, please. ESG has definitely evolved into a core part of the investment decision process, and hence investors are in real need for consistent and high quality disclosure. The landscape of ESG reporting remains quite complex, with many reporting frameworks not fully harmonized. And that's why we put together a guidance to help both issuers and investors understand what good ESG reporting looks like. For example, how to build a green economy narrative. And as I mentioned previously, we're working to promote a globally consistent climate disclosures through our work with the UN Sustainable Stock Exchange Advisory Group. Next slide, please. We have also developed a helpful self-assessment tool to help companies benchmark their disclosure of sector-specific sustainability data. This tool is called ESG Disclosure Score, and it's freely available online to help companies, particularly those who may not necessarily have had extensive experience in sustainability reporting. Next slide, please. This is TCFD is one of the most important climate reporting standards used worldwide. It began as a voluntary set of recommendations, but by now, in many jurisdictions, it has become mandatory. And the rationale is very simple. The exposure to climate-related risks and opportunities has a direct impact on the company value. TCFD reporting covers 4 main areas: governance, strategy, risk management, and metrics and targets. So I'd like to spend the remaining few minutes that I have on governance, which is really the board's oversight of climate-related risks and opportunities. Good governance is something that investors have always expected, but what is meant by that has changed. The simple question to ask today is, given today's challenges, is your board fit for fulfilling its duties to promote a long-term sustainable success of the company? Understandably, directors worry about potential conflicts with their legal responsibilities to shareholders. But there has been a helpful development. Regulators today are increasingly focused on the environmental outcomes of the company's activities. And everyone, including regulators, financial markets, and general population, are getting increasingly savvy, and they easily pick up on the superficial and disingenuous talk about the environment. So I wouldn't even try it. Many boards today accept the needs to consider the environment in their decisions, but and many make the right statements, and many of them are backed by genuine intentions. But the challenge today that boards are facing is how to make practical changes. So in addition to my work at the London Stock Exchange, I chair a working group at the Institute of Directors focused on board effectiveness. So I would just like to use this opportunity to share a few building blocks for implementing climate governance. It starts with arming the board with the right information on climate-related risks and opportunities, on both positive and negative impacts of the company's activities on the environment. And this information needs to be collected from all the different parts of the company on an ongoing basis. Of course, it's not possible to have a quality discussion in the boardroom without this information being fed on an ongoing basis into the boardroom. Climate-related expertise at the board level. Without it, the board simply will not be able to request the right kind of information and ask the right kind of questions from the management team. So developing this expertise on climate matters, starting with the chair, should be a top priority. And then developing the understanding how climate issues are considered as part of decision-making is what means crossing the divide between talk and action. Board agenda needs to be at the outset inclusive of climate issues. Importantly, it shouldn't be a separate agenda item. Environmental considerations should be part of every board discussion and decision, and should also be part of the board committees, finance committee, remuneration and nomination committee. And that brings me to another tool, non-financial reporting, which in itself is a great stimulus of transformation. It's a tool for the boards to check if they're going in the right direction. And it starts with a purpose statement that is signed by the board that talks about the role of the company in the society that's bigger than just money making. And this non-financial disclosure should explain how, what kind of information went into the boardroom, how it was used for discussions and decisions, and how these decisions translated in everyday practices. And it becomes the most effective storyteller if it's voluntary and if it's written in plain human language. So it would also be a remiss not to mention accountability for meeting climate-related goals. In fact, most successful companies in this area link a portion of top executives' compensation to non-financial objectives, including climate targets. So this is what I would say are the building blocks and the general framework of climate governance. And I would underscore that it's not a static milestone, it's a continuous process. Next slide, please. And of course, I would like to finish on this slide. We've been named the Stock Exchange of the Year by Environmental Finance for the second year in a row now. And this sort of an award is a reflection of our daily work to support investors and issuers. And to conclude, a listing on the London Stock Exchange also brings to the company a vibrant infrastructure that supports its sustainability objectives, and a very receptive investor base that will support your objectives with their capital. Thanks.
Катя, спасибо большое. Очень интересная подача.
Thank you so much. A very exciting presentation and the delivery. It's very interesting that you actually help the companies, you assist the companies with the benchmarks, with the investors, you help companies to focus. That's great. A few questions, if I may. Can you please tell what signals do you receive from the investors, not the issuers, but the investors in terms of their immediate needs? What immediate needs do they have? What do they expect from the issuers in terms of the climate risk management? Could you highlight some of the elements and say that these are the priorities for the investors, and what are the responses of the companies in terms of the work of the BODs?
The core transformation of the whole financial infrastructure. And the investors themselves are under the same pressures that the companies find themselves in, because they're held accountable to their capital providers and to the wider kind of group of stakeholders, including the society who watch them with great attention, including to their own capital providers, including to regulators. So there is no choice but aligning themselves with the new mandate. And they're under increasing pressure to use their capital towards creating a more sustainable future for us all, because today the company's success is not about just generating profits. If you go back to the director's duty, they're owed to the company to ensure its long-term sustainable success, and that sustainable success rests on its ability to recognize climate and social challenges and to align your strategy to meet these challenges. And that requires a cultural change throughout organizations, throughout their investors, aligning the company's vision with the vision of its capital providers and with the vision of investors. And in turn, investors have to align their vision with the vision of the wider stakeholders, with the vision of the regulators that is, of course, driven by the needs of our planet and of the people.
Да, ну тут сложно не согласиться, Кать, спасибо большое. Если у нас останется еще немножко времени, я, честно говоря, у меня есть еще пару вопросов для вас.
Yes, thank you very much. Very interesting. I have a few more questions. Maybe I will ask them during the next Q&A session. I would now like to give the floor to someone from the investment community, William Scholes, the investment director of Aberdeen Standard Investments. William, we will be very happy to hear your thoughts. Before you start, though, I would like to maybe ask a question to pave the way for the discussion. What are the main 2-3 parameters that you put for the issuers and the companies that come to you to talk about, you know, the money, the assets that you manage? What are the main parameters do you expect from the companies in terms of climatic risk management? I'm talking about risk management, and on the level of the BOD, what do you expect from them? Thank you.
Well, Elena, thank you very much. And Olga, thank you also for the opportunity to speak. I would say that from the perspective of an equity investor in Russia, our parameters are quite broad insofar as we look at overall company quality. So when we talk about ESG, really thinking about the company managing the broadest set of risks that it faces in the best way possible. It is not to say, for example, that we screen out all high-emitting companies. That is a question for the portfolio, you know, and the strategy that you're talking to. So, you know, for example, my set of parameters is relatively broad. I co-manage some global GEM sustainable funds. I run Eastern Europe equity funds, but I am also Aberdeen's in-house energy analyst for emerging markets. So, you know, at various points in time, I have to put different hats on and ask a different set of questions. I think maybe if I tie your question to the content of my slides, which I think will be appearing shortly, the E in ESG and the climate transition is taking up more time than ever for any equity investor in Russia, and I think that one of the difficulties we find in moving from high-level commitments to action is that even at the highest level, i.e. from a policymaker perspective, some of the frameworks aren't in place yet. So although I've chosen to look more specifically at corporate boards, there is a bigger question that's often reflected back at us by boards about the legal frameworks or the treatment, for example, of emissions that is stopping or appearing to stop some companies from action. A very good example is re-injection of carbon dioxide into reservoirs. Many of our oil and gas value chain investments say this is at the moment stopping them from delivering a more precise decarbonization pathway. So if we go over the slide, please. Let me give the backdrop to why we look at quality and why we particularly focus on ESG. I won't spend long here, but this is what we've been reflecting to boards for a long time, which is that you can earn a premium on your market multiple for running your business in a high quality fashion. And with that, we would think about classic profitability metrics, but also balance sheet leverage. And if you then overlay the additional requirement that you are a good citizen on ESG, you can see on the right-hand slide that EM quality companies that are also good ESG performers outperform over the long run. Next slide, please. One of the pushbacks we used to hear was that the ESG high performers were, a small subset of companies in particular themes, and that this was a crowded trade. And we can just see here, borrowing some data from Bernstein, that in emerging markets, the ESG trade, if you like, is not so crowded as we see in Europe. There's still substantial value on offer, if you like, for high ESG performers. And so then if I turn that to be more Russia specific, next slide, please. The backdrop is that Russian companies are improving. Now, I've used MSCI data here. I think, Elena, in your introduction, you made reference to the number of external scoring agencies there are now. We use MSCI to give a sense of the backward looking, but we mainly rely on our internal ESG scoring to think about where a company is headed, and I'll come back to that in a second. So just to show that as a proportion of the EM index, the Russian companies rated AAA to BBB represent about 30% of their index makeup, which is on a clearly improving trend. However, it's interesting to see that if you take China, which is otherwise viewed as a deep laggard on governance and ESG, that figure is at 50% already in that investment grade band, if you like. Over the slide, please. So this is the slide I wanted to spend a bit more time on. And really, I was looking for a way to illustrate the valuation discount that Russian companies trade at, and to try to give some context to, the rewards here potentially for addressing investor concerns around governance. And you can see here from Credit Suisse's HALT tool that the implied discount rate being applied to Russian companies compared to the global emerging market median is almost 4 percentage points higher in Russia. Now, the normal pushback the normal explanation we would rely on is geopolitics, on sanctions and oil crises. But as everyone on this call will know, the resilience of the economy, given the new fiscal rule, has dramatically improved. The volatility of the ruble has improved, and actually, you can see this discount rate predates the oil crises of 2014. So, what I would contend is that a large portion of this is around transparency, and so I've just used some select data on governance. Looking at Russian company boards, and this is our internal universe. So it's the MSCI 1040 index for emerging Europe, and it's also our own coverage. And you can see there that versus the rest of GEM, 34% of our universe has an independent board majority, and that compares to GEM at 48%. Only 48% of Russian companies have an independent lead director. For us, that's a crucial part of being able to engage successfully. That compares to 83% in GEM. So I won't read through all of these, but the overall picture is of boards that are more tightly controlled. And that, I think, is a big part of the transparency discount. So over to the last slide, please. Why have I focused on the board in particular? Well, it's not to downplay the importance of, for example, your carbon emissions and your pathway to net zero. As we've mentioned earlier, Aberdeen is a huge supporter of the Net Zero Initiative. We are constantly pushing our companies for TCFD reporting. But to rethink company strategy requires reform and requires a different set of skills. And that, rather than simple rules about board director ages, that is the most important for us, that we have as broad a set of skills and voices on company boards, so that engagement, which is a very key part of our continuous investment process, becomes more productive. And with that, I will pause and hand over for questions.
William, спасибо большое за действительно очень интересную.
Thank you very much for this very interesting presentation. Especially slide 5 was particularly interesting. It really reflects all the information that we must know. You're quite a big investor, an active investor in Russian equity, in Russian shares. What would be the ideal board of directors for you? What would you like to see in terms of the diversification, independence, knowledge? What do you expect from the companies?
Well, I think clearly a broader set of industry skills would be important. I mean, there are basic standards of governance in alignment with the King Code that we would like to see. Financial expertise on an audit committee, a lack of executives on a payment committee. These are, I suppose, bread and butter for investors looking at governance. But I think the focus right now is very much, is there somebody at the board level who has real expertise around sustainability and decarbonization, to try to promote where the company strategy is taken next. I think also expertise on social issues, which I would suggest is the next major thematic that is going to be taking up investor time, as it is currently in China, beyond the climate transition. But it's really dependent, I think, on the company and its industry, that what expertise you particularly would like to see on that board. Just more diversity of age, diversity of gender, and the skill set.
И еще один вопрос. интересная информация, что Китай...
Yeah, and another question, thank you very much. The Chinese companies look better than the Russian ones from the perspective of the rating agencies, scoring agencies. Their scoring is higher. Do you trust this assessment, and to which extent do you trust it? Because it looks a bit strange.
Yes, you're absolutely right to highlight that. There is a, when we look at the index components, the larger cap companies within Russia that make it into the index tend to be more representative of Russia's hydrocarbons industry, and that compares to the bigger constituents from from China being largely internet platforms, and typically these find it easier to improve their ESG scores measured by MSCI. So I don't think it's representative of the progress being made at Russian companies, where we see new departments being created to tackle their ESG scoring. Sometimes I would say it's more tactical than fundamental how they attack those scores. But yes, certainly that was to illustrate a point rather than being entirely reflective of the reality at the mid-cap level.
Ну, что важно, что вы делаете свои исследования, у вас своя информация по поводу корпоративного управления в
But
России.
importantly is that you do your own research, you investigate into this situation, this overall picture in Russia, and you are able to make informed investment decisions.
Yeah, absolutely. I would say, go back to the first slide I showed around the quality premium. We view a poorly rated company by an external agency that we think is good as an opportunity for alpha.
Да. Спасибо, Уильям. Действительно очень интересно. Хотелось бы задать
Thank you,
еще...
William. Very interesting. A lot of insights. I have so many questions for you, but unfortunately, in the interest of time, I have to move on to the next topic. And now I would like to give the floor to an investment market veteran, an analyst, and a portfolio manager with whom I worked 15 years ago. Sonia Dilova, a specialist on risk assessment in emerging market companies, more than 10 years with the BMO Global Asset Management. I have the following question for Sonia. How do you think boards of directors can help with the transformation of a company's business model? And what do you as investors expect from the board?
Thank you, Olga. I haven't been represented before by being a veteran, but that's either too flattering or make me a little bit too old. But thank you for the opportunity to be here today. And also, before answering your question, just to mention that I also would like to congratulate you to be such an active chapter of this climate government initiative, which was launched by the World Economic Forum. And Russia is one of the 14 chapters which have agreed to be part of that global initiative, which is really amazing, and being a pioneer in this area, which obviously demonstrates the productivity of your constituents and corporates in Russia. And in fact, answering your questions would be the focus of my presentation, because as you mentioned in your at the beginning, BMO, my organization, is part of the Climate Initiative 100. We are also part of the, as you mentioned, the Net Zero Initiative, which has 43 trillion assets under management committed to that initiative, which I came across it around 40% of all assets managed globally. So it's still getting quite a big momentum. And as a corporation, we have a very intense engagement team on a ESG front, as well as we have our own ESG scoring system. But this approach today to my presentation is mainly coming from my position being part of a board of directors here in UK, and the conversations we have around the table about the climate change and environmental issues, and which I believe is the conversations every board has. And I thought just to turn a little bit the tables in the day and put myself in that situation I found myself recently, and just to present the view as an investor sitting on the other side of the table. And if and answering to your question, which is basically summarized on the next slide, is basically how the boards can address the climate issue. And the key way to look at it is why they first of all think they should address it. And in my view, the main reason why the board should be involved in the conversation of climate change is their main responsibility is looking at the strategy, taking a long-term view, and this is what they do best. And therefore, it is a primary responsibility of the boards to look at this issue. And more importantly, influence the conversations of all stakeholders, not only the investors, which obviously are the most, we can think that we are importantly involved in the financial funding the companies, but at the same time, shareholders, employees, clients, suppliers, everyone in the process is considered a stakeholder in my view. And that broader definition requires engagement at all levels. And finally, why the board should be involved is the fact that they are accountable. The prime responsibility of the directors is the duty of care and also the duty of loyalty. And more interest with the mandatory requirements of climate, it becomes more obvious that the directors will be financially accountable for the climate initiatives they have embedded into the strategy. And in the next slide, I just wanted to bring your attention on how the climate can be issues can be embedded into the strategic conversation. And particularly as William alluded to his presentation, climate issues do contribute to creating value in the company. And that value may not be seen today, but it's a long-term commitment which will be strategically transformational for the company and the business and the way it's perceived by the society. And another point which I came across in my recent research is that being strategic about the climate actually can be also compared to digital transformation and other disrupting kind of factors which are happening in our modern world, which some studies suggest contribute to the fact of how the longevity of the companies. For example, since 1997, the average life of a corporation organization is 18 years, while prior to that, 20 years ago, or prior 1997, the average life of the companies listed on S&P 500 was 40 years. So we can imagine that if the companies is going to employ different type of talent, different type of demographics and generation as part of their talent pool, it is natural to think more strategically in the long term how they would like to position themselves for the long run. Obviously, it's a different matter if they have some short-term objectives. And final point about the strategic implications of the climate issue is the fact that it does create financial risks. And both in terms of decisions which are made, investments which have to be considered, as well as the impact as a business it will have. And certain disclosures recently was discretion of how the financial risk associated with the climate is perceived. But going forward, it seems there are more mandatory type of requirements for that. And it wouldn't be very long till climate is definitely equivalent to another type of financial risk to be considered. And on the next slide, I just wanted to share with you how the conversation with stakeholders can be perceived, and actually that could echo the challenges we as investors are facing on our side, and mirroring those challenges with the conversations. We actually can talk the same language with the board, with the management of the company, and so we are on the same page. We are not fighting on the different fronts, and in particular how the board can bring that conversation at their level, as well as with the different stakeholders, is to look at the data, the way it is useful for decision making, and that will help also the conversation with the stakeholders, more importantly, or to which we are focused on, as well as aligning and different methodologies. We also facing different challenges to get data and which methodology to rely on. So I believe that that search and conversation on the board level and the company level will bring some coherency of views. Assurance from different third parties, as it was alluded, MSCI is one of them. Rating agencies are also developing their own methodology. There are a lot of our providers, but we all have to find a cohesive way, and being helped by that strategic conversation would be even more helpful. And having the framework of that discussion. I mean, you can make your picks of the three abbreviations I put there, which are being kind of coined now to be fundamentals of how the data should be reported on the climate issues. But again, this is not the final type of framework of that discussion. So you can see the board issues and challenges are the same as in investors. And finally, on the final slide, I wanted to bring the conversation about why the boards should feel accountable about the climate issue. If you don't mind, next slide, please. If you can, thank you. And in particular, as it was alluded by William in his answer of what we expect from the boards, is relevant expertise and skill set. And you may recall in May, there was a very high profile kind of case in ExxonMobil boardroom where an activist shareholder ousted two of the board members because they lack of adequate governance and ESG skills. And I think that will become even more at scope of scrutiny by investors. And it is in particular focus during the proxy season at my organization, where our team on the responsible side is voting in different companies. And more importantly, I think Katja mentioned that conversation at the board could be streamlined at different committees. And I think that's true, because that's where the conversation is happening. But it has to be also brought at the table at everyone's at the board to review it, not the conversation to be kept in a particular committees. So that's really the key challenge for the board, and the bigger responsibility for everyone in the board to be involved. And final point I would like to make with the climate governance initiative in which the host is involved, there is a prominent steps forward to include the climate issue, if I can use that word again, to be embedded in the financial responsibilities of the board in the future. So it is a two-way process, I'm afraid. And with that, I would like to conclude and to say that I appreciate the time and welcome any questions.
Соня, спасибо большое, очень интересно. Я, да, сразу прыгну к вопросам.
Thank you very much, Sonia. Very interesting. Straight away, a question. Russian companies, as compared to other emerging markets, other jurisdictions, what do you think is the perception of Russian companies by investors? Because you mentioned activist shareholders. As soon as they step in, this starts some commotion, and companies may get nervous, thinking of maybe they need to make some changes on the board of directors. But still, this movement is still largely about discussions rather than actual tangible changes in the board, in the strategy. What do you think Russia looks like in this regard? Are we driven by shareholders who come to us and say, this and this we don't like, change it? Or maybe there are companies that take this initiative and do something themselves, make some changes on the level of governance and strategy. What do you think?
Presented me as a veteran, I have to say, when I joined the company, BMO 15 years ago, I think the key topic of conversation with the responsible investment team was the governance in Russia compared to Brazil, and saying how poor it is, and Brazil was the benchmark. I think the situation has changed materially, and it's thanks to proactivity of the Russian companies and their opportunities to enter different markets. And to some extent, some of the largest companies, the blue chip companies, which I have the opportunity to analyze in my career, they have made huge strides to have a majority or material part of their boards to be independent. And recently, last year, for example, when Norilsk Nickel had that environmental situation which led to contamination of the local river, which probably all you're aware of, I have to say that, I mean, it was a tragic incident, and obviously everyone was upset on all sides, given what they have tried to achieve and what has happened. But more importantly, in the investor conversation, the whole board was online and available for to questions from investors. And consequently, the follow-up a few months later call with the company, it was acknowledged that compliance-driven risk management, which they have previously adopted, was not something they would like to make that mistake again. So I think obviously it was a painful learning process, but I think it was demonstrated the maturity of the company and the proactivity. And with that example, I do believe that the quality of the boards in Russia are materially better. And the fact that they are looking to improve and looking to learn is encouraging, that with your support as a CGI initiative, that will happen and support the progress going forward.
Будем надеяться. Спасибо большое. Но мы делаем свою работу, да, и внутри советов директоров.
Thank you very much. I really hope so. We are doing our best. Olga and myself, we're also independent directors on the boards of some Russian companies, and probably in some cases we have bigger competence than some of our colleagues because we are in this, we are immersed in this topic day in, day out, so we can be really helpful with our expertise. Thank you very much for that presentation. I would like to give the floor to David Nichols, someone I already know very well. We've been working together, we've been colleagues for a long time. David, over to you. But before I give you the floor, my question is, what has changed on the Russian boards of directors, and what are the objectives that you set for them? What would you like to see on the Russian boards? David Nichols, East Capital.
Thank you very much, everyone. And I'd first like to also wish the Climate Initiative happy birthday for 1 year. I think it's been really remarkable to see what you've done over the last year, and I'm excited where we can go going forward. But yeah, I think firstly, it is important to quickly remind us of how we see this sort of climate backdrop, and essentially why is it important that you and also your companies really listen to what we're saying and act on it. And the first one is the fundamental thing. So I think at East Capital, and definitely me, I mean, we think that global decarbonization will be one of the most disruptive changes we've ever seen in global markets that will impact all sectors of the economy. I'm happy to discuss this more offline, but this is definitely true for Russia as well. You know, a large CEO of a Russian company recently told us that the writing is on the wall for carbon pricing in Russia. Essentially, there will sooner rather than later be carbon pricing in Russia. And we don't think that all of our portfolio companies are ready for this or sort of acknowledging the risk. And the second really fundamental part of the backdrop that's been alluded to by some of the earlier speakers is that now 40% or more actually of global AUM has signed up to this Net Zero Asset Managers Alliance. And I think it really is important to just highlight exactly what that means. It means that all these asset managers have committed to reducing the carbon intensity of their portfolios very significantly, so perhaps up to 50% by 2030. And what does this mean? This means that if they're looking, or if we're looking at say a retail company, and there's two companies with similar fundamentals, one of them, however, has very low carbon intensity as a proportion of revenue and maybe some science-based targets, and the other one doesn't, they'll pick the company with the low carbon intensity and the targets. And if you add that to what the banks and the insurance companies are doing in terms of net zero, I think for us, it's very, very obvious that companies that do have higher carbon intensity versus peers and not very sort of credible targets, they will have a much higher cost of capital going forward and hence lower valuations than peers. And that is something that we think is true for absolutely all sectors of the economy. So even if you don't believe the fundamental side, I really assure you that this will have a very fundamental impact on valuations. But to get to the question, so what do we see in Russia, and what do we really expect in terms of governance, in terms of strategy, in terms of board? And I think, from a sort of very obvious view, that the first thing we really look for is the company actually has a strategy on climate. And by that, we don't necessarily mean a 300-page sustainability report or, you know, tens of slides about how good their ratings are in MSCI or something like that. You know, I think it's so much more telling when we just speak to management or board members and they just tell us very honestly, I mean, there is a lot of uncertainty here, but this global decarbonization is likely to have a very material impact for the global economy and for us specifically, and this is exactly how we're going to deal with it. And so far, we haven't quite got that from all of our Russian portfolio companies, although it is increasing. And the next point is that we are financial investors. So it's not our job to go to companies and say, this is exactly what you should be doing. Instead, what we're more used to be doing, and what we've been doing for many years, is really trying to work to ensure the governance systems are in place so the companies are best placed to actually implement, sort of design and implement these robust strategies. And as has been alluded to by some of the speakers, and I agree with it, governance definitely starts with the board. At least that's how we sit. And sustainability committee is an obvious sign, you know, something we think is important, but it's not only that the fact of the committee that's good, it's that committee is that the people that sit on it are highly competent and really do understand the material sustainability issues of the company. And it's not easy to find those people. We would definitely agree. And I think that's partly why this initiative is so important, because it does aim to sort of bring up that level of knowledge. But I would also add there that this is something that investors are very happy to help with. We can try and find competent candidates. We're happy to sit down with the sustainability committees and share what we see as best practice globally, what kind of things have helped other companies that have been going through similar issues and stuff. So definitely reach out. I mean, that's the main takeaway of this is really speak to your investors to understand what their thoughts are on this, because we do spend a lot of time on climate issues. And the next step after getting the board governance right, and this is another issue haven't quite seen sort of properly done in Russia across the board yet, is to run a very, very robust scenario analysis. And we would be the first to admit that there's a huge amount of uncertainty with regards to this decarbonization and climate change, physical risks, transition risks. But what you do is uncertainty is you run these really robust scenario analysis. And the question we're looking to get answered basically is, what would your company look like if the sort of genuine net zero scenario was to play out? And from an investor's point of view, as of this year, the absolute gold standard to compare yourself against is the IEA net zero scenario. And so therefore, I'd really advise all boards, all companies to just really take a good look at this scenario, see what it implies in terms of carbon price, in terms of commodity price, in terms of what you have to do to buildings, to transport and things like that. And if the board and the company has really done that work, I think we don't see any conclusion other than the need that the company should have very robust carbon intensity reduction targets. And we would always advise the SBTi, the Science Based Targets Initiative, in order to make sure these targets genuinely are aligned. And if there's a view that these are for sort of Western companies and not really studying in EM, I think it's interesting. We're quite proud of the fact that in our Russia portfolios, we have 3 companies who are members of this Science-Based Target Initiative and are in the target setting process. And it's not even sector-based. We have 1 oil company, 1 retail company, and 1 utility company. So it is something that can be done and something we would really advise basically going forward. In terms of the things to work on, I think I've kind of highlighted quite a few of them already. A lot of the focus so far has been on disclosure. And particularly around sort of getting ratings higher and things. And that is important. Although I would definitely echo, I think, with William's point, that we actually rely on our own ratings much more than the external ones. But then aside from disclosure, it's really getting that boards right and then the scenario analysis. And if we look, I mean, we run these models ourselves, we have carbon pricing. And if you look at sort of a net zero scenario, it's very hard to see how quite a lot of our Russian companies wouldn't significantly lose out in terms of valuation from such a scenario materializing. So yeah, I think just quickly to wrap up, global decarbonization, it's highly disruptive, not only for the world, but also for the asset management community. And so if you are behind on carbon intensity, you should expect higher cost of capital, lower valuations. Yeah, Russia's made some significant steps, but I think there's a lot more to be done. And finally, just really advise, reach out to your investors and ask their opinion, because we do have this global view. We speak to companies across the world, and we're always happy to share what we see as best practice, areas of focus, and maybe even help with finding candidates and things. So yeah, I'll finish there and happy to answer any questions.
David, спасибо большое.
David, thank you so much. As usually, very informative and instructive and down to earth. Your perspective is very important because you're in the epicenter of the events. You're working on the ground in the fields, and you really have a great contact with other investors. I'll ask you the most complex and complicated question. What do you think is the percentage of greenwashing in Russia?
And I think if you'd asked me 2 or 3 years ago, I would say actually quite a high percent, because the concept was that ESG was just about, as I said, 300-page sustainability reports and big presentations. And typically you'd actually see that the ESG was purely handled by the IR teams. And that to us is instantly a bit of a red flag, because this isn't an IR issue. This is a sort of fundamental strategic issue. But I think I'm very pleased to say that in the last 2 or 3 years, there's been very, very significant progress. And now when we speak to CEOs, when we speak to board members, they're really speaking the right language and actually doing the right things. And I think I'd actually say I'd even be even more positive that what we see from being, we're very involved in Climate Action 100 and things like that, and speaking to these companies, we actually see there's even more being done than maybe you would tell if you just picked up a sustainability report or something. So I think now I'm confident to say that for a lot of the companies, there's a lot less greenwashing than there was.
Fantastic news. Спасибо большое.
That's fantastic news. Thank you so much. I do hope that this collaboration will continue and we will achieve the level of corporate governance that the international investors expect from the Russian companies. And now I would like to touch upon the next topic of our discussion. We have talked a lot about improving the corporate governance in the Russian companies. To start the journey to decarbonization, but there is another way to achieve decarbonization and to implement the green agenda. And that can be achieved through green instruments. And I would like to give the floor to the representative of Amundi, one of the first institution that created green bonds, and Sergei Strigo is a pioneer, trailblazer, and a veteran in this industry. He was one of the first investors to create a green bond fund for EMs, and he has gained quite considerable experience because he has a perspective. He can share his perspective of the green bond issuing companies and the customers who purchase these green bonds. So, Sergei, you have the floor, please.
Thank you very much, Olga. It's a pleasure to participate in the conference. Indeed, as you said, that I'll probably have slightly perspective from a different angle as an investor in green bonds. And I completely agree with everything that has been said so far in this conference. From the ESG perspective and improvement of ESG profile of Russian companies, or for that matter, pretty much across the globe. But I think also we should not forget about, as you said, on the fixed income side, another way that investors' attention can get focused on the climate-related strategies, can potentially improve the ESG profile of the issuer, and can lead to, in my view, more focus on the sort of ESG and agenda for climate and net zero. So indeed, green bonds, in our opinion, is a very interesting way for companies to fund themselves, and certainly I think for the Russian companies as well. So I have a few slides here, if we can have the next one, please, just to quickly run through green bonds, what they are. So I guess by now the market is pretty familiar with them, but we have a lot of other type of instruments being issued, sustainable bonds, social bonds, sustainability linked bonds, which are, some of them are quite different. So indeed, green bonds are so-called use of proceed bonds, where specific funding is done for targeted projects. As you can see here, some of the projects that are eligible for the definition of green. We've seen a lot of issuance over the past years, mostly concentrated in the renewable energy, clearly clean transport, green buildings, and energy efficiency. So these are typically, I would say, rather non-controversial type of use of proceeds, and investors by and large are very comfortable with them. So clearly this is use of proceeds. Bonds, the other area which we have seen recently in the market is so-called sustainability linked bonds, where it's not the use of proceed bond, but rather there's a certain KPIs that the issuer needs to meet in order to not to have a financial penalty, normally a coupon step up. So if we have a next slide, in terms of the green bond principles, there are four main pillars that an issuer, the company, has to adhere to. So clearly the use of proceeds need to be specifically for green projects. There's a very certain process of project evaluation and selection, then management of proceeds throughout the life of a particular bond, very important. And the last but not the least, and it's actually becoming from our point of view, from investor point of view, extremely important, is the reporting. So clearly the engagement with the issuer does not stop at the point of issue of the bond, but it's becoming more and more important to have adequate reporting, which is, I think, should be very interesting for the board members of Russian companies. Granular reporting, significant amount of details, because more and more investors are looking into that. And I think this is very important going forward. And here, clearly, this is one of the advantages of green bonds, which goes, in a sense, hand to hand with improvement of ESG profile of the companies. Because when we aggregate the green bonds in our portfolios and we manage just in emerging markets around 2 billion of emerging market green bonds, we can easier aggregate the information and report on the fund level, which is very important for our investors. Whereas the ESG, clearly improvement on the ESG, while necessary, it's every investor has a different definition of what is a good ESG profile, what is a bad ESG profile. Whereas when we come to the conventional labeled green bonds, there is a general understanding that there is a certain level of standards, and our investors are certainly very comfortable with that. There have been obviously clearly issues, and you mentioned it earlier, sort of greenwashing has been the issue a few years ago, mostly with Chinese issuers, but by and large, labeled green bonds with certification, with the second party opinion, etc., are by now very well accepted type of instruments. So not many controversies on that part. In terms of the size of green bond market, on the following slide, please. Clearly, there's been an exponential growth in that, and we've seen from the first speaker earlier very similar statistics. I think one point to keep in mind here is that if you look at the right-hand side chart, we don't see much green bonds coming out of the emerging markets. So certainly, versus the financing needs and climate-related needs that emerging market countries do have, we would like to see much more activity overall on that side. China clearly has been the dominant country within emerging market space that has been really, in a sense, pioneering green bond issuance for the past several years. India is probably the second largest, and then we have several other countries that are involved, but certainly nowhere near what we've seen in the developed markets in Western Europe, the US, and also on the multilateral development banks that are issuing quite a lot of green bonds. So definitely more room, in my view, to for things to improve and the market to increase. Another important question on the next slide that is comes up a lot in our conversation with investors or with the issuers actually is the green premium. Clearly, there's a little bit of a difference in opinion between investors who do not necessarily want to have difference in pricing between conventional bond and green bonds, because ultimately the credit quality of the issuer is the same whether you buy a green bond or a conventional bond. So, and on the other hand, from the issuer perspective, clearly they would like to see greenium in there, because there is a certain level of expenses associated with issuance of green bonds as opposed to a conventional bond, because you've got to do the framework, you've got to segregate your assets, you've got to report on these assets as opposed to just generic sort of annual report type of reporting. There is a little bit of a greenium in our view. So when we look at more developed markets, for example, in Western Europe, there is definitely greenium, but it's very, very small. So for emerging market countries and emerging market corporate issuers, it is really not that significant in this stage. But I think with the increase of regulation, certainly on the asset management side in Europe with the new SFDR regulation, the reporting is very, very important. Potentially other areas where the governments can also regulate in terms of taxation, in terms of repo markets and things like that. I think we can see down the road at some point green bonds trading with the difference in price versus the conventional bonds, which would be obviously more beneficial for the issuer in the long run. And just to conclude the presentation, really, the last slide, the attractiveness of green bonds, both from our point of view as an investor, and certainly I think more relevant for the audience here today, from the issuer perspective. So for us, clearly, we all want to benefit, to invest in instruments that benefit the society in the long run, whether it's climate change, whether it's social issues with the COVID-19 related type of issues that we've seen over the past year or so in the market. For investors, it's a very rather easy way to have an impact, because ultimately these bonds are trading in exactly the same way as we have conventional bonds. And certainly the transparency, as I said earlier, the reporting is extremely important for us. So for us, it's a good way to understand what the company has managed to achieve when we look at the green bond and the reports associated with that by the issuer. But I guess more importantly for the issuer, clearly the advantages would be to diversify the funding base. So you can definitely have access to wider investor base, much more diversified. When you look at the Russian market, clearly today there is not that much, unfortunately, of sort of green bonds issued, or in general ESG related bonds issued by the Russian companies, or indeed on the sovereign side, Russian sovereign has not yet issued bonds either. Whereas we, in other regions in Latin America, in Asia, we do see sovereign, sub-sovereign sectors and corporates are much more developed on that side. So diversification of investor funding, and in my view also, which is important for the issuers, is to have a less volatile funding base. So, and I think as the green market develops further, especially on the investor side, this money tends to be much more sticky. And this is the same phenomenon that we've seen over the past several years, for example, in the Islamic funding market, in the so-called Sukuk market, where there's a captive investor base that buy these bonds and they don't tend to sell them unless there's deterioration in credit quality. So less volatile bond market certainly, I think, would be beneficial for the issuers as well. And then, of course, very importantly, enhancement of the reputation of the issuer. So again, this can go in parallel with the general improvement of the ESG principle, improvement at the board level, as the previous speakers mentioned several times, commitment to the net zero, and other initiatives that companies can do. But nevertheless, if the issuer has a green bond framework, social or sustainable bond framework, it does help them to formulate the policy of the company. It does help to focus investors' attention on the company as well. So I think these are the main advantages really for the issuers, especially for Russia. As I said, at the moment we see there could be more done on that side by the Russian companies, and we think going forward, hopefully we will see more issuers coming of the Russian corporates.
Сергей, спасибо большое. Ну, на самом деле вопрос такой, но, к сожалению, не так много времени
Thank
осталось.
you very much. Unfortunately, we don't have much time left, but I still have a couple of minutes for a question for you, a rhetorical question maybe. Some say that there is too much money in the Russian market, so no one is really that interested in ESG bonds. Or maybe the reason is that the ESG bonds issuance terms are not as advantageous, not as favorable as they could be to be attractive for Russian companies. Anyway, as I said, it's probably more a rhetorical question. We cannot really come to a definitive conclusion, but maybe you have some comments about it.
Behind this kind of flag of Russian issuers, I mean, sanctions clearly is one, and we all know the story there. So, but I think in general, there's probably just a lack of initiative on the part of the companies. The sovereign has not issued either, which typically tends to work that if the sovereign issues a green bond, then the companies, especially state-owned companies, do follow on that. So I think there's a combination of these type of factors, but in general, you're right. I mean, yes, there is probably enough funding domestically, so there is no need for the companies to issue. But again, I think it has to be a mentality change, right? If you want to be more ESG kind of compliant, if you will, then this is definitely something that the board should.
Мы в процессе, да, мы в процессе. Но вот как раз-таки у нас
We are
есть
working on it.
представитель компании.
We have on the call a representative of a company which does not engage in greenwashing or and does not lack in mentality. Oleg Tsvetkov from Sberbank. Oleg, could you please tell us what you think about this problem and maybe boast a little bit about your achievements?
Елена, Ольга, спасибо большое за приглашение.
Thank you very much, Elena. Thank you, Olga, for inviting me. It's always a pleasure to participate in such sessions where investors can also share their perspective and discuss focus areas and concerns and what Sber has been doing in this regard. The role of the supervisory board as a driver of the ESG agenda can hardly be overestimated. Sberbank tries to be compliant with the best practices and standards in corporate governance. We've been developing our own practices and adopting and borrowing from other companies, and the market does the same, borrowing those practices from us. And of course, we strive to find a balance among different groups of stakeholders and to take into consideration all their interests. The board of directors, as the protector of stakeholder interests, clearly prioritizes corporate governance practices and the ESG agenda. It's important to note that investors do focus on the timely manner and the transparency, and of course the way the company can keep its promises. So what are the goals of our corporate governance practices at the moment, and how the supervisory board has been leading in ESG agenda related changes? Next slide, please. We have analyzed our own portfolio, our own profile, the profile of the supervisory board, and we've been comparing ourselves with our Russian and international competitors. We have 7 independent members of the supervisory board, 5 non-executive directors and 2 executive directors. We have a chief independent director, a senior independent director, working very actively. And recently we have introduced the position of a special officer for ESG agenda and sustainable development, Nadia Wells. She has been promoting, together with other supervisory board members, all our ESG initiatives.
По устойчивому развитию и всевозможные мероприятия, связанные с обучением.
We have had a number of educational events for management on risks, motivation, internal control, corporate governance, social aspects, a lot of things like that. I would like to provide more detail about how we are building our board, the composition of our board, and what is our procedure for working out the nominees to the board. A lot has been said about diversification and the combination of skills and knowledge. We have a number of years ago, we published a document, the board composition policy, in accordance to which at least half of the board needs to be independent. There is a certain limitation as to how many jobs and positions our board members can hold concurrently. And we also are committed to having independent directors to stay on the board for at least 3 years in order to ensure succession and consistency in their impact on the board activities. Next slide, please. We also have a matrix, or rather a wheel of succession planning, in accordance with which our board essentially ensures this maintenance of the best practices that have been developed over the years, and also this is instrumental in developing corporate governance practices and increasing the efficiency of the board, improving its performance, and of course we this way ensure succession. It all starts in the fourth quarter. At the beginning of the fourth quarter, we conduct a review. We have all kinds of surveys and polls and discussions with the board, with the management of the bank, about the competencies, the expertise that is most needed for the management of the bank, for the best governance of the bank. And as a result of this exercise, as a result of this review, annual review, we build an overall profile of the board, and we also create a pool of candidates with the help of the HR and Remuneration Committee, led by an independent director, by the way. They do their part of the work, and then we hold discussions with shareholders. We take on board the recommendations from shareholders. What is the set of skills that they would like to see on the board? What is the background that they think is most needed? And then their recommendations are formalized in the deliverables of the shareholder meeting. For example, after one of the latest reviews, we saw that we are very much short on experts on ESG and sustainable development. We're very much lacking in this expertise. We are a tech company, and we have a lot of experts on technology, on technological development, ecosystem, platform solutions. That, of course, is needed on the board as well. Things like that are really helpful in building a better board, a more efficient board. We've had a recent addition to the board, Natasha Braginsky-Munier. She joined us last year, and she added to our board this ESG and sustainability competence. Another thing that makes the supervisory board of Sber stand out is continuous learning. Our supervisory board throughout its annual life cycle goes through, of course, onboarding, which takes place every year in different formats, one-on-one meetings, training courses in different areas. And also in the work plan for the board, we have plans about various learning sessions and training courses for supervisory board members. In just a few weeks from now, we're going to have a special learning session on risks, where the supervisory board will be essentially discussing its vision of the risk roadmap for Sber. This is a unique thing that we would like to organize, and we hope it will be really helpful in practice. In addition to all those conventional, traditional things, the supervisory board also will have an opportunity to discuss strategic risks. Technology, sustainable development, climate change. Of course, we are going to have even more training on those areas. Add to that, of course, corporate governance and corporate governance practices that help us going forward. We really try to employ global best practices and work out some of our own. The very last slide, a couple of words on the supervisory board's engagement in the ESG agenda. As I said in the beginning, it is often important to have a top-down signal, this message from the management about leadership in ESG. Quite recently, in June, at the supervisory board meeting, Sber approved its ESG and sustainability policy, which says that Sber is committed to becoming the leader of ESG change at the national and international level to foster an economy of prosperity, efficient for society, and favorable to the environment, based on cooperation and the creativity of our employees, investors, customers, and the state. So this balance principle, the balance among different groups of stakeholders, I think is reflected in this mission, this ambitious goal of our policy. Well, this is not, of course, the topic of today, the ESG policy of Sber, but I just wanted to mention it because this is an important framework for our decision-making process going forward. And another important thing I wanted to point out, all the agenda items for the supervisory board for a while have touched upon ESG in one way or another. Anything related to financial performance, financial results, risk management, motivation, strategic issues. All those things have an ESG overlay, and we make sure that all the decisions made in those areas are compliant with our ESG strategy by 2023.
But 4 times a year, our supervisory board reviews the ESG transformation of the bank. During this process, the supervisory board is analyzing that. We even have a separate section, dedicated section in the dashboard for the members of the supervisory board that shows the status of practices and projects related to ESG and the metrics of implementation of ESG strategy. I've mentioned the training. I'd like to thank Corporate Governance Initiative for organizing these events with fantastic and highly professional speakers. And we have even the members of the board who always participate online or listen to the recording. So it's a very useful and instructive event. Thank you very much. I have a lot of things to say, as usual. I try to make it short, and it's very important that these initiatives on sustainable development and climate are supported on various levels. And it obviously is reflected in our KPIs and our labor safety policy, all of these things that have been approved by the supervisory board, and all of these initiatives are actually supported on all levels. Thank you very much. Oleg, thank you so much. It was really great to listen to your presentation. I felt really proud for this Russian company that is the leader in ESG agenda and on climate action as well. I would just like to add that last week SBIR announced about the creation of the National ESG Alliance. This is yet another example of the leadership that SBIR promotes across the entire range of products that it offers. And we can feel that SBIR was the first company that supported us, and we're still working closely together. SBIR is supporting all our adventures. Yeah, we are always for development, committed to sustainable development, and we always support those who work on sustainable development, because the current status is means that we have to move forward, and we need to think about a long-term perspective. Yes, and it's very important to have a showcase of corporate governance in Russia. We will see how your presentation will affect your share price, because you have been making this presentation, including for the largest investors. And I think that when investors are going to assess the stock price of SBIR, there will be no issues raised related to the corporate, to the governance. SBIR is really a good example for other companies in the industry. Thank you very much for these kind words. Yeah, we are committed to meet all the criteria in ESG. Thank you. Thank you. And I would like to wrap up, to close our round table. sum up, I would like to say that everyone was on the same page in saying that in Russia, the level of corporate governance improved manifold. And there are things to be proud of, but it would be great to have more diversity in terms of the expertise and to have more independence at the board level. Elena, maybe you would like to build on that. Yes, colleagues, thank you very much. We expected a lot of criticism, however, many positive things have been said. I think that we're moving in the right direction. Thank you very much for that detailed and deep discussion that we had. Thank you for sharing your thoughts. We're going to move forward. We're going to make sure that the diversity is there. The diversity of expertise has to be achieved. It should be implemented at the level of the board of directors because, yes, on this strategic level, as all the speakers said, it should be implemented on this strategic level. And this is when the results are going to be real and thought through. And thank you very much. Thank you for the speakers and for the audience. See you during our next sessions. We hope to go offline very soon to see you all in person. Have a great week, end of the week, and see you on other events. Thank you very much.